Okay, here's practice problem number 2 for chapter 19. So exercise 1918, we have to record the transactions in job order costing. So from letters A through H, this is from a specific job. All of the costs that you see here is just from one job, not just one item, but one specific, I want to say customizable job order. So it says prepare journal entries to record transactions A through H. And just like with practice problem number 1, we are going to be preparing the general journal for this company here. So that way we can go ahead and prepare the journal entries for the items listed through from A through H. So let me go ahead and prepare the general journal. So we got account DR. You know what? Let me space this out a little bit more. DR for debit, CR for credit. Okay. So letter A, it says raw materials purchased on credit for $90,000. We're going to go ahead and debit raw materials inventory for $90,000. Okay. And since these materials were purchased on credit, we're going to go ahead and credit accounts payable, which is our liability account for $90,000. Okay, so letter B, direct materials used was $36,500 and indirect materials used was $19,200. Okay, so one thing to note about direct materials and indirect materials used is that direct materials that were used, it's going to be recorded in a different account than indirect materials that were used. Now, anything that's indirect, so like indirect materials and indirect labor, those anything that's affecting indirect materials and indirect labor, those are going to be recorded in factory overhead. All right, because they're indirect. They're indirectly associated with the production process of producing items. So those are going to be included in factory overhead instead of just included in work in process inventory. All right. So what's going to be transferred over into work in process inventory are your direct materials that were used from raw materials and your direct labor. What's transferred to factory overhead is going to be your indirect materials and your indirect labor that were used. All right. So I want you all to note that difference there. So for letter B, direct materials used was $36,500. Since they were used, we're going to go ahead and credit raw materials inventory. And we're crediting that account by $36,500. And we're going to move that balance to work in process inventory. I'm going to go ahead and just abbreviate work in process to WIP, WIP inventory. And that account is going to be debited for $36,500. So that lets you know that the raw materials that were used, so direct materials that were used, is coming from raw materials inventory. And we're going to go ahead and just move that balance over to the WIP inventory account, the work in process inventory account. So we took it out of their raw materials inventory account and moved into work in process because those materials are currently being used during the production process. Okay. So that's letter B. We can say that's B1. So B2 is indirect materials used for $19,200. So indirect materials, they're going to also come from raw materials as well. So we're going to go ahead and credit raw materials inventory for $19,200. And since these are indirect materials, we're going to just transfer that over to factory overhead. So factory overhead is going to be debited for that same amount, $19,200. Okay, so we just transferred the balance from raw materials to factory overhead. So again, What's being transferred over to the work in process inventory account? Let me just put it over here. Hopefully this gets it. Probably not. Yeah, this was actually capture this. What gets transferred to WIP inventories or work in process are your direct materials that were used and direct labor. What gets transferred over to factory overhead, so I'm going to abbreviate as FO, are your indirect, indirect materials and your indirect labor. All right, that gets transferred over to factory overhead. Okay, letter C. Direct labor used was $38,000 and indirect labor used was $12,000. So it lets us know that for labor, we should use factory wages payable, that liability account. So that's exactly what we're going to do. So to reflect the direct labor used, we're going to go ahead and credit factory wages payable for $38,000. And we're going to record this direct labor here of $38,000 into the work in process inventory account, the WIP inventory account for $38,000. All right. So we're just acknowledging that those wages are also included in the work in process inventory account because these are assembly workers. So they are actually directly involved with producing the products. So they are directly involved in the production process, which means that their wages are going to be a part of the inventory as well. So work in process inventory account. Okay, so C1 or C2 would be indirect labor used, $12,000. So for indirect labor, we're going to also credit factory wages payable for, let's see, $12,000. And the account that's going to be debited is going to be factory overhead for that same amount, because this is an indirect labor cost. All right. Letter D says paid cash for other actual overhead costs. Okay. So we're going to credit cash, since they said paid cash, for $11,475. And since it's for actual factory overhead, we're just going to go ahead and debit factory overhead for that same amount. Okay, so when it comes to factory overhead, yes, it is one account, but when you're debiting factory overhead, that's actual factory overhead costs. If you're crediting factory overhead, that's the factory overhead cost that is estimated. So that's applied overhead. So you're not it's not actual yet. So you do have to make an estimation of what you think that the overhead is going to be throughout the period, and then at the end of the period you can figure out, or not even just the end of the period, during the process, the production process, you can get your actual overhead costs, cost amount that needs to be recorded in that account. Okay, so that is letter, let's see, D. Okay, so letter E. So letter E, this is what I was referring to with letter E as far as with applied overhead. How does that get recorded in factory overhead? That account. So it says applied overhead at the rate of 125% of direct labor costs. So I'm going to go ahead and put over here 125% multiplied by direct labor costs, right? So direct labor costs, they let us know it is $38,000. That's our direct labor costs. So we're going to take 125% multiplied by $38,000. That's going to give us $47,500. Okay, so this is our overhead here. So what we're going to do is we're going to credit factory overhead instead of debiting it, because when we credit factory overhead, this is our applied overhead and not our actual overhead. So we're crediting this account by $47,500, and we're debiting WIP inventory, work in process for that same amount. All right. So going back to over here to factory overhead. So when you credit factory overhead, you are crediting that account because those credits are identified as estimates. So this is an estimate, this amount here, which is why they let us know that applied overhead rate is going to be 125% of direct labor costs. The factory overhead amounts here that are debited, these are actuals. These are actual amounts that are debited. Oops, actual. There we go. Okay, so that's the difference there. So it's going to the same account, but on the left side, the debits are the actual costs. On the right side is the applied / estimated costs. Let's see. Letter F, transfer cost of jobs completed to finished goods for $56,800. Okay, so we're going to go ahead and credit WIP inventory for $56,800 because they let us know that the jobs were completed and transferred to finished goods. Okay, so finished goods is just another inventory account. That's it. It's the end all be all inventory account. So from the WIP inventory of $56,800, we're going to go ahead and move this balance over to finished goods inventory by debiting that account for $56,800. So we're moving what was currently in process into what's now finished. So one inventory goes down, one inventory account goes down, another one goes up. Okay, last two for letters G and H. So G, sale of jobs on credit was $82,000. Okay, so this is the sale. So this is the revenue that was generated in amount of $82,000 on credit. So we're going to go ahead and debit to recognize the revenue. We're going to debit accounts receivable since it was generated on credit for $82,000. And the credit is going to go to sales revenue for that same amount. And that's to report or recognize the revenue on credit. Lastly, the cost of the jobs that were sold was $56,800. Okay, that makes sense because that's the $56,800 that was debited to finished goods inventory. So all we're going to do now is we're going to now credit this account by that amount, $56,800. So we're going to go ahead and credit finished goods inventory for $56,800. And we're just going to move that balance into cost of goods sold account for that same amount. All right. Cost of goods sold is our expense account. All right. So this entry is telling you that the inventory was removed because it was sold, which means that we have to credit inventory to reduce the balance in that account. And we're going to have to recognize that as an expense because it's going to get transferred as an expense to the account called cost of goods sold. So that way we can go ahead and match our revenue or match the expenses that went along with generating this revenue here. All right. So that way we can know what the profit is from the sale of those products.